Ladies and gentlemen, in today's in-depth update, we're going to dissect NIO's July vehicle delivery report not just at the surface level, but by going deep into the model-by-model performance. While most people are already aware that NIO delivered a solid 21,017 vehicles in July, what's more important and often overlooked is how that figure breaks down across the company's main brand, as well as its sub-brands ONVO and Firefly. Why does this matter? Because not all deliveries are equal when it comes to profitability, brand perception, and long-term sustainability. While unit numbers can paint a positive growth story, the composition of those deliveries tells us much more about margin potential, consumer behavior, and strategic direction. So today, we'll go over every major model, compare this month's figures with past performance, and explore what it all means for NIO moving forward. This is not financial advice. Please do your own research. To start off, let's look at the total picture. NIO's delivery count for the month of July stood at 21,017 vehicles. But to really understand the implications of this number, we have to separate it by brand. Out of the 21,017 units, the main NIO brand contributed 12,675 vehicles, while the ONVO sub-brand delivered 5,976, and the Firefly sub-brand added 2,366 units. This division is crucial, especially for investors and analysts, because vehicles from the core NIO brand generally come with higher price tags and much better gross profit margins compared to the more affordable ONVO and Firefly offerings. NIO's business model has long relied on pushing high-margin vehicles. Models priced above 400,000 RMB fall into this high-margin category, and they include the ET5, ET7, ES7, EC7, ES8, and the flagship ET9. These vehicles are instrumental to the company's profitability and overall financial health. When these premium models do well, the entire brand benefits from stronger gross margins, healthier earnings, and more robust investor confidence. On the other hand, vehicles priced below 400,000 RMB, such as the ET5 Touring, ET5 Sedan, ES6, EC6, and the newer entries from ONVO and Firefly, are generally positioned toward the mid-market or mass-market segment. They help drive volume, yes, but with smaller margins. Interestingly, not all cheaper models are low margin. For instance, the ES6 is known to deliver vehicle margins exceeding 20%, and the EC6 even approaches 30%, based on previous disclosures from NIO's CEO. These are relatively solid figures and suggest that these models, despite their price positioning, still contribute positively to the bottom line. But other affordable models, particularly the ET5 Touring and ET5 Sedan, have tighter margins, with figures hovering around 20% or even slightly below, given that they're among the most accessible vehicles under the NIO umbrella. Turning to the breakdown by model performance in July, the ET5 Touring stood out by recording 14,418 units sold. This is significant for several reasons. First, this is the second consecutive month that the ET5 Touring outsold the ES6, which used to be NIO's bread and butter model. While the ET5 Touring's numbers were actually down both year-over-year and month-over-month, declining around 13.5% in both metrics, the fact that it continues to outperform the ES6 is a noteworthy shift. Initially designed to appeal to European markets, the ET5 Touring has now found strong traction in China, especially among female buyers, who appear to be responding positively to its styling and practicality. In contrast, the ES6 delivered 3,359 units, marking a steep year-over-year drop of nearly 59% and a month-over-month decline of almost 24%. This drop is concerning because the ES6, since its launch in June 2019, has historically been NIO's best-selling model. Seeing its sales decline so sharply raises important questions about shifting consumer preferences, the impact of NIO's expanding lineup, and the growing pressure from its own sub-brands. The ET5 Sedan, another important entry in NIO's more affordable lineup, sold 1,480 units in July, which is a year-over-year decrease of over 44% and nearly 10% lower than the previous month. Similarly, the EC6 logged 1,425 units, down 45% year-over-year and more than 26% month-over-month. The fact that all four of NIO's top-selling main brand models showed significant declines compared to their performance last year underscores the growing influence of ONVO and Firefly, which are increasingly being seen by consumers as offering better value for money. This leads us to the bigger picture. While ONVO and Firefly are helping NIO increase overall delivery volume, they also appear to be cannibalizing sales from NIO's main brand. The L60, in particular, is proving very popular among Chinese families, thanks to its affordability, practicality, and modern design. Many consumers who might have previously purchased an ET5 or ES6 are now opting for ONVO models instead. And this is where things get tricky for NIO. While it's great to have sub-brands that boost sales, the company needs to ensure that these new vehicles don't dilute the luxury appeal of the main NIO brand or eat into its profit margins. To maintain a clear market distinction, NIO must invest in better segmentation, marketing, and perhaps exclusive features or services that differentiate the premium NIO experience from its mass-market counterparts. Without this, the lines may become too blurry, and NIO risks undermining the very brand equity it spent years building. There were a few bright spots among the premium lineup. The ES8, for instance, sold 1,090 units in July, a 32% increase year-over-year, and nearly 30% up from June. This is the best performance for the ES8 since January 2024, and it's happening before the launch of the all-new ES8 NT 3.0, which is expected to be unveiled during NIO Day, with deliveries to begin in September. Given this timing, there's reason to believe the ES8 could gain more traction in the coming months and lift the average transaction price of the brand overall. The ET7 also had a surprisingly strong month, with 564 units sold. Although this was 24.7% lower than July last year, it represented a staggering 108% increase from June, hinting at a potential comeback. The EC7 performed similarly, with just 254 units sold, down 3% year-over-year, but a massive 202% increase month-on-month. Even though these high-end models aren't yet dominating sales, the month-to-month momentum suggests rising consumer interest. Unfortunately, the ET9 NIO's flagship and most expensive model didn't fare well. It sold just 85 units, a sharp 72% drop from the 307 units it sold in June. This steep decline is worrying, though NIO is attempting to revitalize the model by launching a two-tone color option, reminiscent of luxury offerings from BMW and Maybach. Whether this cosmetic update will be enough to boost sales remains to be seen. The ES7, another previously important model, recorded 0 deliveries in July. However, NIO has confirmed that an upgraded NT 3.0 version of the ES7 is coming soon. If this new version delivers on performance and design, it could help the model regain relevance and market share. Meanwhile, ONVO and Firefly continued to shine. ONVO delivered 5 E976 vehicles, and this figure does not even include the L90, which officially launched on August 1st. That means the bulk of ONVO's July sales came from just the L60, making its performance even more impressive. The Firefly brand also gained significant ground, selling 2,366 units. For a brand still in its infancy, these numbers are more than encouraging. In fact, Firefly is projected to cross 4K deliveries in August, signaling its growing role in NIO's long-term strategy for mass market dominance. To wrap things up, NIO's overall delivery number of 21,017 vehicles in July may look healthy on paper, but the real story lies in which models are being delivered and how that affects profitability and brand direction. The company's high-margin vehicles, its true profit drivers, are seeing steep declines, while its sub-brands are growing quickly. While that's great for volume and market reach, it presents real challenges for maintaining a premium brand identity and achieving strong financials. On the bright side, there are clear signs of life in some flagship models, such as the ES8 and EC7, and the new launches could provide the necessary boost in the coming months. Going forward, NIO will have to strike a careful balance between scaling through sub-brands and reinforcing the premium appeal of its core lineup. If it can achieve that, it may be able to grow both volume and profit in parallel, a winning formula in the increasingly competitive EV landscape. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.